The big question now is, do we think that this is a bottom after everything we've seen over the course of the last few months? Let's bring in Sarah James, a managing director at Cantor Fitzgerald, covers UnitedHealth, UNH, and many of the peer companies in its group. Sarah, can you just take us through right now? This has been a dramatic fall for a Dow component. What exactly is driving this much downside? It can't just be the CEO change.
No, it's actually a margin issue with one of their core products, Medicare Advantage, so what insurance is sold to seniors. And we got a first glimpse of it in the first quarter. We knew that there was a little bit of a problem. They took guide down. But what we learned today is that it's broader. It's not just senior retirees and group accounts like your state employee teacher union. It's also individual seniors and high acuity seniors. So there's been some cost compression, and they suspended guidance while they brought in probably one of the best CEOs in the industry who has operational and strategic expertise, has run a Medicare turnaround, and we believe is the best person to have in place at this phase for the company.
I mean, he was the CEO for over a decade, was the executive chairman for the balance of those years since around 2017. It's not like there's a continuity issue here. This is the person who's been at the top of the chain for a while. What exactly is it going to be that makes you feel as though this is a stock that can meaningfully turn around in the next several quarters?
Yeah, and that's a true statement. We're calling this as the bottom. We think that they've taken out all the earnings uncertainty in here. We just cut our numbers today to what we think is a really realistic floor of about $23.25 and getting up a little bit above $26 next year. That allows them to reprice next year for Medicare Advantage, bring up margins. Next year's a great year for them. They have margin expansion in Medicaid, Medicare, Optum Health, Optum Insight. There's a lot of tailwinds coming up once we get past this uncertainty. And I think that's what the new management team is really trying to do, is set the floor for where the base is. Now that we know where all the problems are, you can take out the entirety of that earnings. We know it's still profitable, but go ahead and be conservative and make it a new base to grow from there.
Hey, Sarah, yeah, I agree. And in fact, part of the performance of UnitedHealth over the last, say, 3 or 4 years up until this point where the stock's been effectively cut in half was that it deserved a higher multiple because it was growing faster than its peers. It really was an extraordinary story. What the market has done to the stock, and leaving fundamentals aside, but popping this kind of into your model or any other analyst, it seems to me we're somewhere around, the midpoint of the pre-25 guide, which is, somewhere around $26 a share for 26, which leaves you at 12, 13 times, which is a multiple that, to me, again, is my math wrong? And if not, what changed today? Because otherwise, this thing seems like it's not just, an opportunity, but an opportunity a lot of people have been waiting for.
Yeah, it's days like this where I wish I could invest in stocks that I cover, because I would be loading it up into my retiree account. This stock, outside of 2008, when we had the CDO market collapse, has not traded this low. This is a diversified model. They have a lot of businesses that are doing well, that are going to go into margin expansion mode the next couple of years. So you rarely get a discount like this. So you're right, 12 times is an unusually low amount. The way that we think about it is we get a quarter or two ahead of now. Guidance comes back into play. Confidence comes back. They've repriced their Medicare book, and you can start to get to that sort of mid-teens type of multiple. And if you get there, that's 30, 40% plus upside. So we think this is a great time to be looking at a diversified player like United.